Good morning, everybody, and welcome to the midweek market update live stream from Smack the Markets for Wednesday, the 16th of December. So we've got quite a bit going on at the moment, haven't we, in the markets? So if I can ask you just to take a few moments to take a read through the risk disclaimers, make sure that you're comfortable with them. In brief, we're not licensed to be able to give advice. Any markets, any opportunities that we're looking at, any sort of strategies that we use are purely for illustrative and educational purposes only. Please make sure that you're comfortable with these terms before continuing on this session today. So at the moment today, we've got a raft of fundamental data coming out. I'm not really too sure where to start. I suppose topping it off, we've got the FOMC interest rate decision and meetings this evening. That's at 7 o'clock to 7:30 London time. We've got oil inventories at 3:30. And in between now and then, we've got a raft of US dollar news, euro news, and Great British Pound news. And of course, on top of that, there is also the Brexit trade negotiations still going on. And they really are sort of pushing that down to the wire at the moment, aren't they? So we're hearing quite a lot of rhetoric around those negotiations all of the time, and they're coming through the professional news feeds. And that's what's causing the swings in price action on sterling markets, which I'm sure you've all noticed. On top of that, also, we have the US stimulus discussions as well, and those are still ongoing. So let's take a look at what's going on. Morning, Gordon. Hey, Fergal. And we've got Michael and Martin. Well done. Hi. So let's take a look, first of all, at what's happening with the markets that we discussed on Monday, because Monday we discussed the Swiss yen here on the newsletter. This is the daily chart, and this market has had a very strong move. It's been one of the better trends out there for some time, particularly on the sort of lower time frames. And this week we had the beginning of the week, we had the pullback in here to this level, and we're looking at sort of support coming in here and seeing if we can get a continuation to the long side. Indicators are still looking good from a momentum perspective, but so far this week we haven't seen any of that play out. If we just come up to the bigger picture, we can see where we are in here on the bigger picture. There's still potentially sort of room to the top end of these highs, but coming down to the sort of 4-hour time frame where we can start to see the sort of price action in a bit more detail for this week, we can see really what's sort of been going on. The strength in the Swissy has just really been unable to sort of continue, and it's just sort of drifted sideways. The other thing that I'm not too keen about here is the extending divergence that we're starting to see here in the markets, just indicating that we've got sort of weakness creeping into this trend. So not looking particularly sort of strong at this moment in time. If price got above the recent high here, which would of course be above that high on the daily, that secondary high here, then we might start to get a bit more sort of strength coming in. Also, if we have a look at gold, we can have a look at gold here. And just discuss what we were looking at on Monday again. We're looking at the sort of level here on the market here for the market to sort of break down and move down towards, off this sort of shelf here, down towards that sort of 1800 level. Now, what sort of happened again with the sort of changeable and sort of volatile market conditions, we actually took a trade on this earlier in the week, didn't play out, we got stopped out on it, and the market's now sort of seeing strength coming back into gold. So the trend here on the short side of gold is not looking particularly easy and it may well sort of soon be coming to that sort of cusp of that previous lower high here. If we just come down to the 4-hour time frame, you can see the sort of level here that we were looking at, and we can see that the sort of turnaround in price. And if we come also over to the S&P 500 this week, and take a look at what's happened here. Now, interestingly, let me just zoom into this. Probably going to be easier to see this on the 4-hour time frame, which we'll take a look at in a moment. But essentially, we were looking at the strong trend here on the higher time frames, and price action has sort of pulled back into the moving averages, and we're looking for a continuation of the move. If we take a look at this on the 4-hour time frame, and of course all of these indices tend to sort of follow a similar direction, but on the 4-hour we'd got this sort of nice gap appeared in the market. We'd got a sort of a nice sort of support forming here on the sort of lower time frames. If we come to the sort of 1 hour, for example, we can see that sort of forming. And that was a nice sort of decision point, nice structure level there. So what we're looking at on Monday was, if the market found support here, we're looking for a continuation higher. If this level got taken out, then we were looking for a gap close and even a possible move down to the structure line to the short side, which in fact is exactly what happened. Well, in fact, both things happened, which wasn't particularly helpful. So as the morning progressed and as the cash market opened, we got the market sort of pushing to the long side, but then we've seen that gap close and that level get tested now again. So interestingly though, since the market retested this level, we've got a double bottom here, again double bottom with divergence, and the market's bounced off it. So at least we're seeing some sort of technical bounce off a technical level in price action. So now markets are looking sort of fairly strong, and all of the US equity markets are looking fairly strong this morning. So this looks like we could be in for a bit more of a Santa Claus rally in US equity markets. We could see again a continuation to the long side, and again if we come up to the daily, let me just sort of zoom into this. We can see that we're fairly close to those all-time highs. I wouldn't be at all surprised to see if we see, the path of least resistance, certainly at this moment in time, is to the long side on these equity markets. In fact, this morning, all three equity markets, so the S&Ps, the Dow, and the Nasdaq, they're all looking extremely strong. So again, if we have a look at this in the context of the Dow, again we can see here on the Dow looking extremely strong, and also the Nasdaq as well. The one thing I think to sort of bear in mind, and I think there's a lot of sort of school of thought here, what's going to happen. We've got the Santa Claus rally taking place at the moment. We've got something like a week, maybe a week and a day of market action, of healthy market action until the Christmas break. What do we think is going to happen here? So let me open it up to you. What do you think is going to happen? Are we going to see a rally into the end of the year? But then what's going to happen next year? Are we going to see stronger equity prices next year, or are we going to see a decline? What do you think? Higher or lower? I'll tell you what I think in a moment. Let's have a look at the Dow though. So if we have a look at the Dow, what we can see with the Dow is that as prices breaking up above that 30,000 level, it certainly had quite a tough time getting around this area, but it's making some good progress to push to the long side. But at the same time, we've got some weakness coming in here on our sort of technical indicators. So from a technical perspective, we're sort of seeing, some sort of weakness coming in. So Michael's, you've put your toe in the water and said higher. I think there's certainly interesting. Let's see if anyone else is going to commit to a decision, an idea here. Let's have a look at this on the weekly. So again, looking at this on the weekly, looking sort of fairly strong. Hi, Satar. Likely to be higher. Virgil thinks there's a retracement at some point soon, but higher for the moment. Gordon's higher. All-time highs tend to lead to more. Yeah, very good point. Very good point. And it is rather interesting. And that's why I wanted to ask the question, because there is sort of two schools of thought here, and no matter all of the analysis that I get to determine sort of longer term views, they are pretty split either way. And from a normal perspective, as the markets are pushing on to all-time highs, you expect them to, normally times are good, things are good. There's a lot of optimism because the markets have pushed into, it takes a lot to get markets up to all-time highs. Generally, that continues. And of course, we could see into next year, we could see again continued unraveling of the sort of lockdowns as economies sort of open up more and vaccine rollouts continue. We could see that again bolstering stocks and seeing those equity markets run higher, and that's certainly sort of one school of thought. There's another school of thought, and one thing that also sort of keeps in the back of my mind is what has driven the markets to the highs at the moment. Is it stimulus? And there's a lot of school of thought that a lot of stimulus money is driving markets higher. Now, is stimulus going to be a continuous ever sort of printing press, for the markets? At some point, one might think that that may well sort of come to an end, and what would happen to the markets if that were to happen? And of course, at the back of our minds also, a lot of these companies that have now got very good valuations are looking, have had a pretty rough time through this sort of past year. So there's a couple of schools of thought there, and I think it's going to be interesting to see how this plays out. My thoughts are that we could see these markets continue higher, but I think we will see some sort of retracement at some point in time. Now, whether that's a market crash or not, I wouldn't sort of suggest that, but maybe some sort of healthy retracement. So certainly going to be an interesting times, I think, going into next year. So let's have a look at opportunities going forward into this sort of the tail end of this week and possibly into the end of the year. So again, if you've got markets that you would like to take a look at, ping them into the chat, and we'll take a look at those as well. For me, I think one of the common themes here, well, two common themes, is around the US dollar and also around the Great British Pound. Now, the US dollar, I think, is probably a little bit more easier to sort of determine. So if we have a look at some of the markets that I think which are looking the better ones on my watch list at the moment, I've picked out markets like dollar yen. We've had longer term short trend. This has not been an easy trend to trade by any means, but at the moment we've got strengths and weaknesses in alignment supporting this to the short side. And again, you can see that we're having sort of pretty good run on this at the moment. So again, we can start to look at opportunities, for maybe sort of pullbacks and sort of positioning. Now, I don't think dollar yen is one of the best markets for that at the moment. Sure, we've got the market in the right direction, but some of the others I think are looking a little bit better. So again, things are so changeable at the moment. Let's just have a look at the dollar Swiss, which is one that I was looking at this morning. So again, let's just remind ourselves of the higher time frames. We've got a very powerful short move here after the breakout through here, and the market sort of continuing short. Again, you can see this pretty much along all time frames. We've got the breakout here on the 4-hour time frame as well, and if we come down to the sort of 1 hour, this is the sort of thing that I was looking at this morning. So we've got a bit of a level through here. Now this level, of course, we saw that on the 4-hour time frame as well, so we know it's quite a significant level. And I was marking some sort of fib study in here, and sort of looking to see what sort of area the we could potentially get a retracement into. And you can see that at the moment we're getting a bit of a bounce off here, but it's not pulling it at the moment into some of the best retracement areas. So we've got around a 50% fib level. 61 is just a little bit on the high side. Let's take a look at this. The more recent leg of the move. So it sort of coincides with the 61.8% fib level. I should sort of get that a bit more precise. You can see here. So we've certainly got a bit of a zone here that could be looking particularly interesting if we get a retracement back to that. Now, this morning, we've had a fair bit of news out which has caused all this volatility, and I think it was the Euro PMIs, I think, that sort of really drove a lot of the Euro markets and some of the dollar markets as well. So back into here could be a nice area to start to look for positioning for maybe a continuation. And you can already see that we're getting a bit of a bounce off here at the moment. So I'm just having a look at this on so we got dollar Swiss, which I think is sort of one of the nicer looking ones for potential pullbacks. Another one is the dollar Sing. So again, if we have a look at the dollar Sing, and again, if we just remind ourselves of the higher time frames, this is probably a much cleaner trend, as we can see to the short side. Again, on the daily, at these sort of levels, I'd rather see a pullback for a potential sort of opportunity. And again, if we start to look at this now on the lower time frames, we see that there is a bit of a breakout level through here. If we come down to the 1 hour chart now, You can certainly see that we've got a bit of a level through here. The trend has broken through. It's quite overextended at the moment. We haven't seen evidence at this moment in time, although we've seen a bit of a pause, we haven't seen the evidence at the moment of a retracement like we've seen in dollar Swiss. But again, if we start to see, well, how would this look if we did get a retracement? And you can see back into this level, which also coincides with the smack the market's pivot points as well. We've got the 50% retracement of this recent leg of the move, and it's quite a significant move as well. So again, some sort of pullback in here I think is a good one to keep an eye on for dollar shorts. So it's dollar Swiss and dollar Sing, I think, are some of the sort of more attractive ones to me for sort of positioning. So the other big news, of course, is Great British Pound. And Great British Pound regarding the Brexit trade negotiations. So again, what's people's thoughts on this? Do we think that there is going to be a deal, or not? What do we reckon at the moment? So sterling at the moment likes to, thinks this is likely to be higher. Liking we're pricing in that we're likely to get a deal, that there will be some sort of conclusion. But it's certainly been quite a rocky ride, this, hasn't it? So Fergal says he's given up guessing. I know the feeling. That's it. That's really interesting. So Gordon says no. Satar, you're a no deal. Michael, you're the optimist. You're saying there's likely to be a deal. Goodness me, that's interesting. I thought a lot of people would be thinking that there would be a deal. I have to say. But I think it's just absolutely too close to call. It's very difficult to call this. But I do. My gut reaction is that I think that there would be a deal, just because even if it's a bit of a fudge deal, something that is a bit of a sticking plaster until and negotiations sort of continue next year. But yeah, because I just don't. I just can't believe that there's too much at stake. I think from both sides not to come to some kind of agreement. But that's no trade advice at all. And certainly, what we've been hearing on the news wires, of course, is all sorts of rhetoric. From both sides as they play out their negotiation tactics, which of course the media is one of those tools that they use. And so it's just gone into extra time and extra time and extra time. This is the weekend gap here. Now, interestingly, the market managed to hold above that gap close. It hasn't sort of closed that gap. And last night, sort of late yesterday afternoon, we got more news coming out on the news wires that sort of indicating that MPs were a bit more positive in London. But then again, this morning we've had comments to the contrary. So it's very difficult to call on that. But I think sterling is certainly looking more optimistic here, that there could be some sort of arrangement. So I think trading these markets, trading cable or sterling, is going to be much more of what we would call a speculative trade, because any kind of news announcement or any kind of comments that could come out at any time could reverse the market by a significant amount, and that could cause problems to lower time frame trades. Now, a couple of markets here. I had a look at the sterling markets, and some of the ones that I thought were a little bit more easier maybe to consider were things like the Great British Pound against the yen. And again, this is just because the price structure is not so extended. Now, the problem with pound against the yen is that both the yen was very strong this morning. Again, Great British Pound was strong this morning as well. But also perhaps pound Swissy. Now, pound Swissy this morning, just before this, we started here, was strengths and weaknesses were in alignment for this to move to the high side, so in a favour of sterling. So one thing just bear in mind is that there is sterling news. We've actually got the first lot in about 4 minutes time. So we have got that on the fundamental calendar, but we have a look at the pound against the Swissy on the lower time frames. We can see that the trend structure is a little bit more sort of tradable, and you see the risk that is associated here is that the market slammed back in past all of the fair value zone, and now we're finding a bit of support here again. So Fergal, yeah, so pound Swissy was the only one to close the gap. Yeah, I agree with you there. So this one did close the gap over the weekend, which you can see here on the sort of 4-hour time frame. And so at least we don't have that sort of magnet here, and now the market's sort of moving higher. But again, if you have a look at these on the across the board on the lower time frames, they are looking a little bit more, I wouldn't say easy, but they're probably some of the better ones out of the suite of sterling markets. So if you fancy a speculative position on sterling, then I think some of these are the probably some of the easier ones for positioning. And you can see this across all of these lower time frames. Probably the 1 hour is probably looking a little bit better. So as I say, pound Swissy had the strengths and weaknesses supporting it sort of earlier this morning as well. And one of the other ones that I sort of noticed this morning, well, a couple of others that I noticed this morning from the dollar perspective, I had the Kiwi. So if we have a look at the Kiwi here. So again, if we think about strengths and weaknesses, Kiwi dollar is supportive here to the long side. So we've got strengths and weaknesses in alignment. We can see that those have been in alignment for some time. We've had some good trend here on the daily. Again, the challenge really is to find some reasonable price action where we could start to maybe look at sort of positioning. And that's not quite so easy at this moment in time. You see around this sort of top, we've got a bit of a top in price action going on here with these sort of double highs. So maybe if the market does break through here and we can use this as a bit of a support base, then this could start to look a little bit more interesting, a bit more easier. And actually across the board, the Kiwis, I think, are probably some of the better markets at the moment today. So even if we, sticking on that theme of dollar Kiwi dollar, if we come down to some of the lower time frames like the 15-minute chart, again you start to see some fairly sort of reasonable looking price action here. So again, not too bad. Again, these some sort of retracement back into geometry zones could present some potential opportunities. So the last one I've got this morning was that I picked up from my list was the dollar CAD. So if you've got anything else to on your list, then flag them up in the chat, and we'll take a look at those. But this was the other one that I picked up this morning on my morning scans, and that was Kiwi Cad. So again, this has got strengths and weaknesses in alignment, or it did this morning. Yeah, so CAD is still weak. The Swissy not quite as strong as it was. Sorry, this has got the Kiwi is still strong, and the Caddy is still weak. So we've got strengths and weaknesses in alignment for this. And you can see here on the daily that the market, whilst we're not going to be blessed with the easiest of price action, we can see that the market has pulled back into a significant level here. Probably easy if we just sort of zoom out of this a little bit. You can see a little bit more significance of this sort of support level that the market found, and that's around that 90, big round number of 90 or 9,000. So if we come down the time frames here, we can see that price has tested this probably 4 times now, failed to get through this this lower level, and now it's sort of pushing to the high side. We're getting a bit of a breakout of this sort of structure, so it's not the sort of cleanest, but we can certainly see that we've got some evidence there to the long side. So again, the lower time frames are not going to give us the best sort of structure. But again, I was looking down onto the very low time frames, and you can start to see that we're starting to get some sort of evidence of trend here now. Again, breaking above this level. Again, we've still got strength in the momentum as well. Come down to the 15-minute chart. Starting to see the development of a trend here. So again, a couple of things starting to move. So Michael, you're looking at the Euro Kiwi and Euro Yen, both short, but the Euro PMI blew up the idea. Yeah, it kind of, that move messed up a few markets, didn't it? The one thing with the euro market is that it's likely to be impacted much more so with the dollar, and with the dollar declining, that's likely to give some help to the euro as it is. And again, euro has strengthened significantly since those PMIs, which certainly sort of hasn't helped. So let's just have a look at yeah. So that's the result of your of the PMI news completely moved Euro Kiwi to the high side. There's actually a bit of strength coming into this now on the indicators as well. So not looking easy. So euro dollar still on the euro side of things. Let's have a look at euro dollar. The only, euro dollar is anything we've got here with euro dollar is that we got quite a bit of news on this through the course of the day. So 10 o'clock, 10 to 10 and 10 o'clock, again, we've got more news, more fundamental news out. Then on the dollar side, we got 1:30, we got 3-star news. Then 2 o'clock, we got 2-star euro. So it's actually quite a lot. So finding a window between that, between those news events is going to be the thing, I think. But we've had a powerful move on that move, and I think probably a pull back into some sort of value zone. Let's have a look at this. Have you lined up any potential sort of entry on this, Fergal, or are you just waiting to see if we get something? So in with these old highs, I think. Let's have a look at where this sets up. Okay, so we're into 38.2% into that level on the big swing. Let's come down to the lower swing in here, so it's about a 50% on that lower swing. Yeah, so I'm kind of with you on that. If it pulls back to the breakout level, this is the sort of thing that I think Fergal's looking at. So we've got that breakout level there, and we've also got the that's a 50% move retracement back in. So what have we got there from a pivot perspective? This is 1.2180. In actual fact, we've got a pivot there as well. So 1.21752, we have a smack the markets pivot as well. So that's pretty much in that cluster. So you've got a pivot point, the breakout level, and the moving averages, and the 50% of that recent move. And that's on the 15-minute chart. So I think that's probably one of the another good dollar-related market to keep an eye on. So just keeping an eye on those dollar markets. So the ones we discussed earlier, the dollar Sing, that's not retracing yet, but the dollar Swiss is retracing. So a little bit like the euro here. So we can keep an eye on the euro perhaps, but if another potential one would be that dollar Swiss. Okay, if we have a look at that dollar Swiss, you can see that here. Back into that level that we discussed earlier. So you've got two there that are looking quite interesting for dollar-related moves. And it's probably one of the better trends out there is dollar weakness at this moment in time. Okay, so that's probably the best that I'm seeing out there at the moment. Again, choppy market conditions. They always are when we've got a lot of big issues going on in the world of politics and economics at the moment. And and a heavy schedule as well today. So let's start to sort of wrap this up for today's session. We'll keep an eye on these markets and others that we've discussed in the trading room, and we'll keep the posts going in there of anything that we're seeing. This session, this is going to be the last session that we run live this year, because next Wednesday is coming right into the end of the healthy sort of trading period. We're then a couple of days before Christmas and the Christmas sort of shutdown. So this is going to be the last live session that we'll run this year. We'll restart them after New Year. So the first week of New Year, we're back in on the 2nd of January, and we'll be running the new live session at that time. So we'll I'll keep you posted on those anyway, and that'll be scheduled in the session as well. So thank you very much, everybody. I certainly hope you found it useful, and I'll speak to you a little bit later. Bye for now.